You know, it's like, I think what's not okay is when you're not, like, that guy was like insufferable, I think. Like, I actually was like, had no zero agenda, you know? But I think like, it was funny because like I asked a lot of simple financial questions, like, oh, what was the old revenue of the company? And it was like this kind of like this assumption that like, oh man, that's a really dangerous question to ask. Why are you asking that? Like,
right.
What? Relax, man. I just talk to me about the business. And he's like, I'm suspicious, you know, like I want to talk about conspiracy theories. I want to talk about like he was like, I'm asking like interesting questions, like, are markets fair? Great question. Not the fight here, right? The fight is, am I going to make money buying or selling AMC? Not, you know, are markets fair? What happened when Robinhood, you know, got into a liquidity problem? You know, is that fair for us? Like, at the end of the day, my job is managing my portfolio is to make more money this year than I made last year, and that's really it. Or to have more money this year than I had last year, and that's it, right? Like, that's my job, that's my goal, and anything else that's like not productive to that goal is irrelevant. So, like, to me, like, you know, anybody that sort of like becomes, you know, gets this allegiance to a stock or to whatever, it's like the most dangerous, obvious thing you can get, because you start to get blinders on, like, oh, I can't never sell this stock. I'm in a cult now, you know. But it's interesting to sort of see that, you know, that's what they kind of have. Some of them, at least, that's not representative of everybody that owns that stock, I would think. Some AMC holders seem fairly dogmatic and almost like, you know, like I got kicked out of that space like several times and cut off several times. And there's this like, you know, an assumption that if you are asking questions, I mean, even asking questions, like financial questions, like really dry financial questions. I was asking, and the guy was like, "This is boring." Like, it is boring.
Right.
What do you think financial analysis is? It's fucking. It's not an action movie. It's pretty fucking dull. Like, I sat at my desk, you know, 15 hours a day with like the only you know, suntan I ever got was a monitor screen glare. So, you know, it's not that fun. I mean, I don't know. What do you think of all that? I'm sure it's been interesting as a cognitive scientist.
I can't say I am. You know, it felt at times slightly uncomfortable too once everyone started going on my website and then pulled up the Robinhood case study.
Well, you have nothing to, I mean, like, it's uncomfortable, but like, look at your resume, right? I mean, pretty impressive stuff you've done so far.
Thank you. I mean, it's mostly like I feel, when I say I don't know, I feel very confident in saying I don't know, because I really don't know.
You handled that really well, I think. It was like that guy had such a fondness for his own voice. Like I was jumping up and down during that part. I was like I was trying to say, like, you know, I didn't have speaker. But it was trying to like jump up and down, say like, yeah, that's the mark of an intellect. Somebody that can say he doesn't understand, he doesn't know, he's not sure of himself 100% of the time. Like, that's what you should be. That's what you should be more like. And this guy's in college and he knows that.
Thank you. Well, I think a lot of my questions really come from not someone who participates in the markets as much, because I participate in the market. You know, like, my parents didn't really teach me much about stocks. My first purview was through Robinhood at the age of 18. And I really liked the experience because I learned a lot about markets, but then there was, like I mentioned before, some gamified elements that sort of really scared me. And it was like one specific example, like,
I like
right
how
before
you made up that word, like, according to him. Yeah, that was your coinage. Gamified. Like, you should have just been like, yeah, like when confetti pops out when you press buy, that's what gamified is. When you level up, like,
right,
that's called gamified, because every other platform doesn't do that.
Exactly. So, like, something that really scared me is that, like, I once got a notification on Robinhood that, like, okay, congrats, like, there's this thing called options, and you can click this button and you can, like, look at all these different options you can buy. And I was 18, I had no idea what this was, and I was like, oh, is this like how people, and I was this naive, I was like, oh, is this how people are able to, like, make
I don't know, I'm actually on the Robinhood side. I'm on, not the Robinhood, the Apes side on this one, because, like, at the end of the day, like, everybody's made that mistake. I remember when I was like 14 making my first trades, and the kind of shit I was doing and buying and like all that's like, it was a mess, you know? Like,
Right.
I didn't know what the fuck was going on.
Yeah. And I totally hear it. And I'm glad I made that mistake, but it was kind of difficult, like working as like a lifeguard, like when I was like 18. And then like I would open up the pool at 5 a.m. and I'd look at the markets once it opened at 6 a.m. And then I'm like, and then I lost $800.
Right. And I lost money
that was
trading too. And that's your natural, that's some of us call that a tuition, and that's very normal and very to be expected, but then you get smarter and you say, gee, that hurt. I want to know, how do I do better? And Amy seems to be pretty smart. So let's talk to her a little. I have a big long preamble, so I don't want to but I do want to say hi to Amy.
Hi, is your brain okay?
That hurt a little bit. I went in there trying to be as patient as I could be because one, you don't make money by just being argumentative and like the other guy, Ligma, was in there and he was just like throwing bombs left and right. And I think if I was against another hedge fund or something, I'd have no problem doing that. But I know that like the guy said he had like $100,000 worth of stock and he was like patting himself on the back for being like a huge holder.
Martin, all do, but they bought it like 40 or 50 or 60. He said he's been buying for the entire year, which means he bought at the
he's down. Yeah, he's
down bad. Down very, very bad.
Even if he bought it at the lowest possible price and he's up huge, $100,000 is you're not a large holder of anything, right? Like, you're not a large holder of a privately held company. That's like a startup, basically. You're definitely not a large holder of a $10 billion company.
Right.
You got a long way to go.
They think they own this company. It is their company. Like I was listening to him run down we're doing this and we're doing that. And
it was a little scary.
No, I was like, what?
But again, what bothered me about that isn't the delusion of like this company is doing well or whatever. Like what bothered me about that was just a refusal to even remotely engage in like a very innocent line of questioning. Like I didn't start being like a sarcastic jerk. I didn't start like, asking, like a lot of people have that like, innuendo, like, oh, and revenue hasn't grown in this long, has it? Like that's not what I was going for. I just wanted to know like the 101 because I never looked at AMC, to be frank. Now that I'm looking at it, like, I was just like, my first question was like, okay, what was revenue before COVID? Are we going to go back to that? Are we going to go more? Did they make money back then? And I actually looked back in 2019 and 2018, if you net out cash flow and CapEx, which is called free cash flow, they about broke even, which is not good, right? Because, you have to restructure a little bit. Maybe they can get like, if they were run by PE, if they were private, maybe they can make $100 million in cash flow for argument's sake. 20 times that. Is $2 billion. Again, I'm being like kind of generous since it's a business in secular decline. Even add another $1 billion just for all the shenanigans, like the apes buying their movies, going there and donating money. I don't think it's a good business model, by the way, when your shareholders are buying your product to make your stock go up. That's like, not usually a good idea. That's a little nuts. But even throw in $1 billion for that, even though it's like arguably a value destroyer. Throw in another $1 billion if you wanted for the gold stuff, which is clearly a money loser, not a money maker. But let's add $1 billion anyway. You still get a stock price that's like a couple bucks, like at most. So, $5, like, and that's being like really, really generous. That the actual underlying business does really well. The like 2 or 3 like fraudulent things they're perpetrating are worth billions of dollars, which they're not. They're worth nothing. Like, I like, it's a math problem. The borrow rate is a bad thing. Like the title of the chat was that it was a 29% borrow rate. Like that's not a good thing. That's like hearing the Grim Reaper laughing before, he chops your head off. Like, that's a sign of bad things to come when people are jumping over each other to borrow your stock and short it. They're like, no, I'll pay 29% to short this thing. Like, that's not good. That's bad. That's people basically saying, yeah, I'll pay 30%. I know this thing's a fucking zero. Like I'll short it. I used to pay 100% borrow rates on biotechs I knew were going down, and I'd still make a fortune on them because, it's a great sign. It's like such a good predictor of stock price change. Like it's a arbitrage basically. Of course, it can go the other way. That's always true. But I think these guys are like really hell bent on the short squeeze thesis and the little market dynamics and stuff like that. That they sort of, it's like really romantic, I guess, like in a sense, like a literary sense of, this idea that like, oh, here's a hedge fund trader and he's like caught in a short and he's sweating bullets and stuff like that. And that surely happens sometimes, but most of the time it's like, okay, I got 600 stocks in my portfolio, or I got 200 stocks in my portfolio. And I don't really, like I worked at a Tiger Cub, like on average, we'd have 300 or 400 stocks in our portfolio because our boss, like, he would know the top 50 stocks, but the rest of us would know the other 200 or 300 stocks, and it just didn't work like in a way that, like they're pretending it works, where, it's like everything to a professional. Like it's not. Like professionals don't really care that much. Like, I don't know. So anyway, it was really interesting, even for the 10 minutes that they would countenance my existence.
Yeah, you're coming in late to the game. You missed them basically saying they wanted to pay off the company's debt.
Oh, that's great.
$5 billion.
I do that for all the companies I have an investment in. I just call the CFO. Listen, I know you guys are in trouble. Can I pay your debt? Not buy your debt. No, I'm just gonna write a check just for you.
Well, let me tell you the best idea. It was that every shareholder goes and buys popcorn every day, takeout to take home.
Oh my Lord!
4 million of them all go to buy popcorn every single day to take it home, and they'll pay off their debt.
I think the other really crazy assumption, I really want to move to anybody else who wants to comment. You guys can just, you don't have to be so polite too. If you want to just jump in. I'm not going to kick you out like them. I may ask you to keep quiet if you're interrupting in a bad flow, but it's really not that serious. The stock market's like important, but like if you're like 600% exposed to AMC, like, yeah, I would take it. Like I'd be crazy too, but like there's a reason normal people don't leverage up and trade one stock only, What do you think?
I'm sorry. Just real quick.
No, go for it.
Go ahead.
I was just going to say I don't have a whole lot of value to add in this conversation. I'm a bit more of a private markets guy.
No, absolutely. Just real quick, and appreciate the conversation for a bit and found them quite entertaining. Entertaining things you can do if you ever speak to them again is ask them how much money would AMC make if they filled every seat for every showing for a year.
Well, that's a good question. That's a really good question, actually.
You get a lot of blank stares, or the digital version of a blank stare. Like ask
that's like a very like. That's a very that's what I tried to do, is go in there and like be open-minded and honest. Because like, listen, I have no allegiance to fucking any stock. Like if it's a good long, I'll buy it. I don't go fuck. I'll go raise money and buy it. Like I could raise $1 billion tomorrow if I wanted and buy 10% of AMC. But it sounds like maybe the worst possible idea in the history of mankind. But if I heard what I needed to hear to make a decision like that, okay, whatever, But like to be even afraid of even telling me what the old revenue is, like what? I've never seen that. I've been doing this a while now, and I don't understand why that's such a worry. Like
cults don't bear much inspection. In fact, that's one of the features
rules of a cult.
Yeah, exactly. Stop asking questions like that.
Yeah, that's and that applies, by the way, in like not just silly cults like this, but also academic cults, like really refined. I've never been a part of but like Scientology probably has that, but also like quantum physics. Niels Bohr once joked, "You're not allowed to ask such a question." Of course, he was a brilliant man who was just kidding, but like that dynamic does exist in other places where there's sort of that taboo question. We have an Arabic speaker, I believe. Feel free to jump in.
Good morning.
Ben Thomas.
Good morning.
Yeah, I'm sorry, man. I can't hear you.
I am happy to hear from you.
Yeah. Yeah, you have to get out of that chipmunk voice. I'm sorry, man.
Martin, did you see what I sent you to? I was cracking up when I sent you it about they're about to run out of cash.
Yeah, that's the funny part is like a dividend of what? Like the debt holders won't let you do a dividend. They're going to do a dividend of an NFT is what I'm told, which is,
You haven't even heard the worst part about it. Half of them believe that dilution is bad and won't allow it, and the other half believe it'll make it squeeze.
yeah, it's a shame because like I want to be useful to this community, like this Wall Street Bets thing, as I was an early part of it. But a lot of people don't even know that, which is unfortunate because it's kind of like there's many millions of people that, are just kind of like want to break the stock market. And I talked in my very first spaces, and I don't want to go over like trodden ground, but one of the things in the history of Wall Street that's really interesting is that there have been a number of attempts to corner stocks and corner different instruments, including commodities. And I've actually tried to do a few myself. And the thing about corners is they're fascinating because they kind of conceptually should work. And the first corners existed, this fantastic book by John Steele Gordon called The Great Game. And it's about the history of Wall Street. And it's really an amazing book because, we tend to fixate on like things that have happened in the last 10, 20, 30 years. But this stuff happened 150 years ago. And, especially around the turn of the century, there was a lot of people cornering stocks, and some great fortunes were made and lost doing it. And the SEC was formed, in essence, afterwards, partially because of it. And if you want to look at real short squeezes like that, those were pretty amazing. Of course, GME and AMC are also good for the history books, but this isn't the first time something like this happens. And probably the craziest part of it was the Hunt brothers, who tried to corner silver. And each time like a corner mechanism comes out, the SEC creates or any other regulator creates sort of some instrument that stops it. And the Form 13G and Form 4 sort of came out in response to the turn of the century corners. And even corners in the 80s, sort of like the high yield sort of Milken world were also important, like the Bowski Milken sort of era. That was covered well in a book called Den of Thieves, which I would also recommend reading. One of the best Wall Street books ever. Of course, the CFTC was sort of rules were changed, and the Fed actually intervened in the silver market to depress the price of silver and ruin the Hunt brothers, who filed for bankruptcy after being the richest people in the world. Interestingly, within I think 18 months, they filed for bankruptcy or something like that, which is pretty amazing to go from richest in the world to bankrupt. So now we have a distributed corner. It's a Web3 corner. So instead of one person doing it or two people doing it, it's like distributed across, it's crowdsourced corner. Has actually happened once in the history of Wall Street. It was a company called Piggly Wiggly. And the guy would take out ads in the Wall Street Journal to get people to buy his stock. So this has happened before. It was a while back, but it didn't work, as you can imagine. And the problem with the distributed corner is that you can't control the actions of each player. You can kind of try to make this like cult thing where you're like, oh, okay, everybody do this. Diamond hands, right? Cool, it sounds good. And again, I'm always good for a buck. Like if you got a good plan, I'm in. I buy stocks that are fundamentally flawed and overvalued. I try not to, but sometimes I do, because if I think they're going up, we'll buy it. I'm not going to stick around for very long, but fuck it, I've done it. So that's what a good trader does. You can have one piece of information in your head while you're holding another, and at least that's what I think a good trader does. Some people would disagree. And again, you have to have the discipline and patience and quickness to sort of quickly shift your ground when you feel the market's moving against you and things like that. And again, all this trader dogma in the world doesn't really get you instant profits. It's a very dogged fight, right? Every day for P&L. And every rule that I've just said can easily be broken and you can still make money. So there's definitely no 101, here's an instruction manual for how to make money in the markets. And for obvious reasons, if there was such a thing, it would get arbitraged by automated players. So anyway, getting back to AMC, I think that the fatal flaw with this distributed corner, because it checks the boxes from other perspectives. Nobody has to file 13G, because it's not like me and let's say Amy and FinTech and McWage and Dimitrick and MVB, we all go to like, you know, I don't know, let's all go to Spark Steakhouse, get the private room, sit down and be like, all right, listen guys, you're going to buy 4.9% of the company because you'll be under the threshold to report to the SEC. You'll buy 4.9, you'll buy 4.9. I'm just pointing with my fork as I'm eating a big juicy steak. And I haven't had steak in like 6 years, so it's a pretty good dream. And you know, all of us together, we're going to own like 30% of AMC, but we don't have to ever disclose it as long as we kind of keep this between us. Okay, guys? And like, we'll all have a secret message on Signal or on WhatsApp, and we're just going to coordinate like that. And we're going to make sure the stock goes up. And that's something that like,
Martin, can I just say something? Do you not know that they all held this from $11 to $72 and didn't sell it?
Well,
and they've held it all the way down.
Well, that's what I'm getting at. So I don't think that's actually 100% right, because I think that there are people, and so like if we had that private dinner, right, which we could do next week, come to New York, we'll all put our money together. Of course, you have to have the scratch to buy 5% of AMC, which
they call this an idea dinner, right?
Sometimes an idea dinner. This is more of this is a very dark, shady business meeting, and you need a lot of money, right? I mean, this is, you know, 5% AMC is not a fucking small amount of money. You need hundreds of millions of dollars. So I'm pretending we're all super, super rich. So in any event, we do that, and it's called wolf packing as well, which is distinctly illegal. And again, that's a term from the 80s era, Den of Thieves. And it's also called grouping in a more like sort of common parlance. SEC calls it grouping. So in any event, you know, we decide to form an illegal group, and it's a crime. It's a securities violation. It's not a federal crime, really. It could easily be one, but in general, it's sort of like, okay, it's not that bad. So we form this group, and we decide to all buy 30% of AMC without filing that we're a group, without filing that, you know, with the SEC that we're actually acting in concert, and that, you know, we are going to sort of be diamond hands together. And the reason that we're supposed to file when we own 30% of a company is so that everybody in the market has the same information, that there's this big cabal forming that's going to own 30% of this company, and it's going to be interesting information for everyone to have. So we're depriving the market of that. So this checks the box, because like, okay, what are you going to do? Make 4 million people file a group that we're the apes and this is how much stock we have? They're not going to do that. The SEC doesn't really care. It's just sort of like a loose commonality. It's not like people acting in concert. So I think like from that perspective, because as you may know, once you file a 5% position or a 10% position, especially, that's when you have to file on every single transaction you make afterwards. So if you try to sell, let's say we accumulated at 30%, and we did it the legitimate way, which is we filed a 13D, and then we sold one share, the market would freak out, because it means that, oh man, they have 30% they're going to sell. If they start selling now, it's a really bad sign. So transparency is why the SEC wants you to file in big positions. So here you have no transparency. You don't know what these apes are doing in concert, because there's no way to tell. So it's a really smart way to sort of do a corner if you wanted to do one. The problem is, and this is a really long-winded way of saying this, and we'll open this up and have a little more fun, but just to be scientific about it, I think that the average ape or whatever is still a person that's governed by behavioral finance, to Dimitri's point. Like, at the right price, there's no such diamond hands, right? At 100, at 500, at 1,000, I don't care how diamondy your hands are. Like, you're going to look at your P&L and you're like, man, this is a lot of money. I got to sell. And there's no human being on the planet that has that strong hands to say, I'm going to stay in forever. Because ultimately, that's what the market is. And the funny thing is, the guy's like, oh, there isn't enough supply to cover your short. Like, bullshit. Like, every day the stock trades millions of shares. Like, what do you think? That's fake stock that's not available? There's a buy and a sell for every single share that trades, right? So, like, I'm looking at the volume today. I'm trying to look for the volume today, but it's, you know, this is not like it's 40 million shares. Like, it's ridiculous. It's one of the most like liquid stocks. If I wanted to buy to cover 20 million shares, I could do it. Like, and at least today, it wouldn't have even moved the stock down. That would be $300 million. Like, that's a good size position for Citadel or a 0.72 or a big hedge fund to sort of, you know, like, this is an attractive short, I think. So anyway, to me, like, I'm open-minded. Like, I'd buy any stock if I thought it would go up, and I was reasonably probabilistically sure that it would go up, but this isn't one of them, I think. So anybody else want to chat about it?
So I think, there's an element of the price doesn't really matter. It doesn't signify anything except the price itself. So you're right. There's people, you're going to find sellers of these apes at certain levels as the stock ticks up. But, I truly don't think they have an end game. Like when you talk to them and you ask them, what is the ultimate goal? The short squeeze will never be enough. And the reason they didn't sell last time there was a short squeeze is because they said there's a bigger one coming. So my question is why hasn't the big one already happened versus why do you think that another one is coming? Like, what are the odds of a second one? When, especially again that you have a lot of other factors that there's a lot of other things going into the equation ultimately to limit this from happening again. So those are my initial comments.
So are you short?
I do have a short position, and I've had one in and out, since the squeeze last January or January 21.
Oh my God. It's a real live breathing short seller. Good God.
It's funny too because I think like if you go on like YouTube and like look up some of the videos, I'm pretty sure Amy can attest to this too. Like you see like AMC to like 100,000. There's people making videos like 1,000 a share, and then they're being called a shill. Like the leader of the movement was this guy called Trey, and then he made a video and he said like I think 1,000 a share like is like the best we could get. And then like there was other people calling him a shill, saying it's going to 10. Then people are saying he's a shill, it's going to 100. And some people even say 1 million a share. So like it goes back to like what we were just saying, like that game theory thing, and like break the stock market and kind of like just getting married to a stock.
Yeah, I mean,
like, wait, what do you mean? I'm the leader of the shills. Don't take it away from me.
Yeah, your crown is just.
It's funny. I met Amy a while ago. I was hosting spaces for Clover Health, holding it, but I think it's a very good company still. Just given Chelsea Clinton's involved in it, and the future is moving towards AI. I guess that's kind of like the thesis for it. But there's still.
Wait, your bull thesis is.
Well, no, they're pre-revenue right now, but they're pre-revenue right now, but they're still they should be profitable earlier than expected. They should be profitable by May, I think, of next year, and they weren't expected to be profitable until 2024. So they're like a little bit ahead of schedule. But more than a little too early, unfortunately. Yeah, again.
How do you determine when someone's going to be profitable?
By listening to what the company says. Like I was just like listening to the earnings calls and like what they were saying, and they were saying that they're ahead of profitability. And then after I saw Chelsea Clinton buy in, which was funny. So,
well, you can forecast too.
Yeah, you could build a DCF model and forecast their terminal values out to 5 and 10 years.
Something like that. But forecasting is what the art of like projecting a company's business operating reality and.
But
future.
I mean the DCF thing. The DCF
is something you can spend some time looking at. There's a fantastic professor at NYU, Aswath Damodaran, that sort of teaches
Martin,
finance
did your
courses.
space cut out? Or can everyone hear me?
No.
I actually have videos. I think it's Dimitri. I took an investment banking class. So if you like just look up my name on YouTube, you should be able to find me. I have a bunch of investment banking videos on how to build like leverage buyout models, DCFs, like a bunch of different ones. And they're like 2-3 hour long videos. Like, I'm not trying to promote myself at all. I literally have 2 subs. Like,
can you guys, you guys can hear me okay, right?
Yeah,
I can hear you.
Okay, good. I'm just trying to be mindful of the person I'm with now. So anyway, I think that the biggest problem here isn't so much like the bad fundamentals or like obviously the company's got a pretty crummy situation. I think the bigger problem is like, again, I'm like sort of like attracted to this idea that like, and I think there's a reason millions of people are long this stock and like they're willing to like plunge into this financial uncertainty. Like, I don't think they necessarily believe that, the fundamentals are good. I think they enjoy the lottery dynamics of it. I think they enjoy the, like, it's like paranormal psychology, or abnormal psychology. It's like just really bizarre, like group phenomena where, I don't know, there's just people who really want to believe that they can beat the pros. I think that's a big part of their thesis too.
Fuck the
It comes
hedgies, bro.
down to gambling, man. Like it's there's a reason why more people are on the slot machines than, in private markets or in the stock market looking for real value.
A lot of the ties goes back to GME too. Like people saw what happened to GME and they said, oh, if it could happen to GME, it could happen to AMC too. So that's like why they're all in on it.
There's a similar characteristic that goes across. There's more than just GME and AMC, and there's a similar characteristic. And what I tend to see a lot in the options chains is either there's a big run up because of the message boards, or there's one or two people behind buying far out the money, short dated calls, and that's what starts the squeeze. And especially when there's low volume before these names get hyped, it puts a tremendous pressure on the market makers to buy the underlying stock, and that's where you get the initial run. And the initial run, causes these, nickel options to, turn into $1 pretty quickly. That gets amplified on the message boards, which makes everyone else jump in. So I tend to follow that phenomenon, and I've been on the long side of those too, because you see that over and over again.
Yeah.
I also have a question with regards to why it seems like a lot of people are much more willing to jump into what are seemingly Ponzi schemes in this day and age. And I wonder if it has something to do with wealth inequality, or people having a very pessimistic view of the future, where they feel like the only way they can...
Yeah. I'm writing an article about this, actually.
Okay.
There's a lot of literature, and kind of more your field than anywhere else. And I don't understand if you're a programmer or a psychology student, but I'm going with the psychology student side.
Kind of both.
Very cool. There's a number of stuff in literature about this. These beliefs in astrology tend to spike around times of global uncertainty. So I'm analyzing astrology, feng shui, telepathy, like things that are just patently kind of absurd. And AMC and GameStop is kind of probably a new thing for abnormal psychologists to study. And basically the uncertainty that exists in the world because of COVID or war or things like that, those are reasons for us to want to really grab onto something else that's and feel like we're still in control of our lives, even if it's committing financial suicide.
People want to feel like they belong to something too. We live in a very disjointed society where people don't feel like they belong to anything important. And I think you have global uncertainty, scary times we live in, a pandemic. We're all very much distanced from each other and all communicating over social media primarily. And so now you feel like you're part of a movement. Your movement is stupid and is based on really bad ideas, but hey, you're part of something. And that's why they constantly reference community.
And we see that in certain NFTs and certain Web3 projects as well, right? You have people that are well, let me kind of donate, in essence, instead of donating to UNICEF or donating to, whatever your favorite cause is, $50 a month or whatever. Okay, I'll donate to the stock market. I'll donate to Steve Cohen and Ken Griffin and guys like that. They don't realize they're donating to those guys. And, I'll take my 0.3% of that too. But you're donating to a pool of, shark-like investors that are happy to take your money.
I mean, I can kind of understand. If you're a degenerate gambler, buying a lottery ticket, it's like a 1 in 1 billion chance of winning. Buying out the money calls,
this has a much better chance of winning, I would say.
Exactly. You got a much better chance of hitting out the money call than hitting the slot machines.
The other thing that's funny is that they said then it's against them, and if they went to a casino and they knew that a casino was cheating, they wouldn't go back to that casino. So why, if they were willing to gamble on the stock market, and they feel it's like a rigged casino, why do they keep coming back? That's another thing I always find interesting.
Casinos are rigged against you, and people still go. That's just human
psychology. It's because they think they can maybe break it.
Yeah,
that's right. That's right.
Find in a casino that's 50-50 odds. You can't find that unless you play back that at Atlantic City.
I stepped out of my roommate's place, so I can talk a little more freely. I think the whispering thing is going to kill me. So I think that's exactly right. If I think it's the same kind of person that would have no problem playing blackjack all day long, and if you've ever been to AC, you kind of can see the that prototype of like a person who's like bags under their eyes. It's like some weird time of the day and they're still playing, like, and you're just like, oh man, I feel bad for that guy. He's like a gambling addict probably. I think these people know enough that their husbands and wives or whatever would feel like, oh man, you know, I got to talk to Greg, or I got to talk to Sally or Amy. Like, she's really having trouble. She's sitting in Vegas all day long, and I see the withdrawals from the 401k and, you know, all this stuff. Like, we know that would be like a sign of mental illness, but like to do it with AMC or GameStop or something, it's like, no, I'm investing. Like,
but you also hear what they say. I'm getting my sister in it. I'm getting my parents in it. I mean, it's worse when you hear those stories.
That's like more of an MLM or Ponzi, right? Like, that's like, you know, can I get other people to sort of do this? I mean, it reminds you of Herbalife or something, right? Like, once you start recruiting your family, like, my family doesn't need to fucking gamble in the stock market. I do plenty of that for us. Like, you know, it's you know, why does my sister and brother need to own any stock? Like, unless they, you know, I don't know. This whole thing is just puzzling to me. Like, I went in there to try to make sense of it, not to like go proselytize my own answer, because I don't have an answer. Like, I don't know anything about AMC. Here's 100 people talking about it. Let me listen. And all there is like some crazy dude, basically.
I'm also curious, what do you guys think the role of the brokerages in all of this is? Like, in the way
Very
that
little.
they crafted. Okay.
Very little, yeah.
Yeah, they don't care. Like, that's the funniest part.
I'm also curious about like the UX design, and that's the field where
I don't think that
tend to
matters.
look at things. You don't think it matters?
No, not at all. Like, okay. Yeah. Again, you're gonna enjoy my article. I would never shill anything, but I have a Substack, and it's going to be like a really interesting article. It's called on Apophenia. I don't know if you heard about the Apophenia. This Klaus Conrad came up with this idea. You're a psychologist, right?
I've not heard of it.
Okay, yeah. So basically, it's this tendency to connect dots where dots don't exist, and or dots don't mean anything. Like, you know, so you see something that nobody else sees, and you just pretend it's really important. And you know, when you have dots like, okay, I got a short sale, I got a interest rate, borrow rate of 29%. I've got, you know, a bunch of Wall Street guys shorting. I've got, you know, Robin. Yeah, that's you know, you have to have like several things lining up.
Popcorn sales.
Well, you know, I'm thinking
I'm just
more conspiratorially.
The fact that these guys were like drawing all these different dots, that I understood that they're trying to tell some story about like a bullish vision of AMC, but I was like, okay, wait.
Well,
that's popcorn sales.
That's fine, because like every investor does that. Like, even if I hold Amgen stock, I'm thinking like, oh man, could that drug be a $5 billion drug? Yes, it can. You know, it's like not a rational, like always,
right.
You know, like it's okay to dream sometimes. Let me just finish real quick.
Yeah, good.
So when you connect 3 or 4 conspiratorial dots, like, oh man, look what they did with Robinhood. They pulled the rug. Now all the short sellers are doing this. Oh, look at these Wall Street guys. I got to take action. Like, those are dots that a paranoid schizophrenic would connect, right? Like, they don't mean anything. They have nothing to do with AMC, the actual business, the actual company, right? So I think that's sort of my point, I guess. What do you think, McWage? I know you were talking, and then Doge, come on in.
Well, what I wanted to interject right when you were saying that, which is why I was trying to interject, but my apologies on that, was I was going to talk about SOFR. So there was this whole repo going on, and that's like a big thing for them, is they think, oh, the repo is over $2 trillion now, so that's ultimately going to cause MOAS, but it's all done through multiple ETFs, because ETFs have like unlimited liquidity. Right. But like this transition from LIBOR to SOFR, everything is secured, so it's not like
it doesn't make a difference.
It's not like LIBOR, which is unsecured, which is what we saw during GME. Now everything's secured through SOFR. So a lot of them don't understand even what that is. Like, granted, the repo is going to have to be wound down. That is our inflation. But at the end of the day, that's what SOFR is for. SOFR is the repo. Everything is secured.
Misunderstanding.
Like you said, they changed the rules.
Right. Misunderstanding market mechanisms because they fill a narrative that you needed to fill for your psychological benefit. I think that's the sort of basic premise. And I've seen it in smaller doses. you know, in biotech stocks or in anywhere else. But this is like a big dose. What do you think, Doge? Doge?
You hear me?
A little bit. What's up?
Okay. I basically got into AMC about. I know this has been asked 100 times, but I'm thinking about putting.
Are you drunk?
I'm like really high right now. But
okay, yeah.
So
yeah.
No.
I'm just gonna put you on mute real quick. Joe, do you want to jump in?
Yeah, I just wanted to. I raised my hand and wanted to be a speaker back when we were talking about trading as a gambling problem.
Yeah.
Well, one of the things I've actually started to do, I'm in a bunch of, trading communities. I know a bunch of guys who they have these financial advisory notices saying, "Oh, I'm not a financial advisor,"
Mm-hmm.
And on top of that, I've been starting to convert these guys, educating them, saying, "Hey, there's a serious problem with a lot of people losing money, gambling essentially. We need to add an extra advisory there saying, hey, if you are losing a lot of money, you need to seriously consider that you might have a gambling problem.
Absolutely.
And you need to stop trading." I've got like a couple dozen communities now to do that.
Oh, that's great. There was a very famous case recently, and I followed it closely because of my own legal tribulations with a guy named Andrew Casperson who concocted a gigantic fraud to get access to a bunch of capital, and I think he got something like 100 million. And then Casperson traded the money. He said he was going to do private equity with it. He did not. He even made like a fake Blackstone website and like a fake Blackstone office and a fake Blackstone phone number. I mean, it was crazy, right? And so the guy got $100 million and he started trading, guess what? S&P futures and S&P options and things like that. Really like gambleistic kind of, trading instruments where nobody really has an edge. Like if, very few people, if anyone, can predict the direction of the S&P 500 in a short-term basis, right? It's really close to random. In fact, it'd be a pretty good random number generator, but that's a whole other story. So anyway, I think that, Casperson got caught, right? And at one point, the funniest part was Casperson was up like $400 million. And he raised 100 and he was up like 400 because he wasn't a nobody. His name is very famous in New York. I know his brother, who was an investor with me, who did quite well, investor in one of my drug companies. And his father was a very, very famous man who unfortunately committed suicide. This was a long time ago. So anyway, Casperson lost all the money, as you can imagine, right? Once he was up 400 million, he was like, "Yeah, baby, let it roll. Let's go." You can't stop a streak. You ever see that South Park? Have you ever seen that South Park episode? That's one of the best episodes where they're like, let her roll.
That one.
Yeah, and the kids are like, "Dad, doesn't it make sense to like take our money off the table?" Like, shut up, Stan. You don't know how gambling works, right? You never stop a roll. And so anyway, they lose all, Casperson, this is real fucking life too, right? Casperson loses all the money. All the money's gone. He tries to raise more money and he gets caught. So Judge Rakoff is the nicest judge in basically the universe. He gives him 4 years, which is, got my mouth watering. Like, and this is before I go to trial. I'm like, man, if this guy's got 4 years, I'm getting 4 months. Like, this doesn't make any fucking sense. And, because this guy actually lost money, right? My case is somewhat well known for I had a fraud with losers, which was a good thing for me. Otherwise, I would have gotten like 70 million years. I would have had a Jurassic era sentence. But I got 7. So, the point is Casperson's pitch to the judge, his lawyers, he had this brilliant lawyer who said, "My client, Your Honor, is a gambling addict. And the proof of that is that once he was up several $100 million, he didn't take his money off the table. He didn't return it to investors and say, listen, I'm sorry, I'm not going to do this hedge fund thing. He could have done that and pocketed $200 million. No, he needed to trade. He needed to trade so bad that he traded even more, lost it all, then tried to make more fraudulent statements to get more money just to satisfy his gambling problem. And it kind of worked. And if you look at like some of the
oh my God.
Yeah, and if you look at some of the felons that I know a lot of felons obviously now, a good chunk of them have serious, not gambling problems, of course, but drug problems. And judges have been more and more lenient, like, okay, I understand why you robbed that store. I understand why you robbed the bank. Like, you're getting high on heroin every day. Like, I understand why you sold drugs, because half the heroin you sold was to yourself. That makes sense, like, you know, to some extent, right? You don't have an evil mind, you have an addicted mind. And I don't know to what extent AMC people are gambling addicts. I actually don't think that's probably true for the great majority of them. And again, I'm hoping, like, you can sort of separate concerns, as a programmer might say. Like, you're supposed to sort of take this, okay, the world's unfair, all these Wall Street guys seem to have an edge and they're making lots of money and we're not. Okay, separate question from, is AMC a good buy? Right? Those are two very different fucking things. Like, you know, and if you can separate those two, you may be able to make a better decision. And also, like, when the time comes to screw over a Wall Street guy, maybe you can have enough money left over for that opportunity to arise. You know, and I liked what you said, like, that's what you said. What's your opportunity cost? Right? That's sort of like the key question. Like, why own this stock right now? Like, why do you have to buy this stock? Like, what's going to happen that's like so important that you got to buy this shitty, deteriorating company? Like, maybe once it starts to short squeeze, you should buy it. Like, that's kind of what I would do. Like, if it goes from 13 to 15, I might be like, fuck it, let me buy 100,000 shares, see what happens. You know, like, that makes more sense. Like, watching it drop is like, oh man, like, because when something like this, an overvalued stock is dropping, like, the market's becoming more rational, and it's probably going to keep dropping. But when an overvalued stock is going up, there's like some weird supply-demand imbalance that may continue. And we've seen that with GameStop. There are plenty of opportunities for GameStop to quote-unquote short squeeze, which isn't even a thing I really believe in. I've been on Wall Street 20 years, basically. Spent a few of those in prison, but I still had a Bloomberg in prison. So, like, and still I talked to Bridgewater. I talked to this Bridgewater trader every day while I was in prison. Like, so I don't know, like, I still was doing my thing. Point being, like, 20 years later, and having, like, shorted millions, tens of millions of shares of stock, maybe hundreds of millions of shares of stock. I mean, I shorted 100 million shares of stock in one company, so maybe it's billions of shares of stock. But the point is, like, I don't even know what a short squeeze is. Like, can someone explain that to me? Like, is that a psychological thing when a trader feels pressured to cover a short, or is that like a forced cover? Like, to me, like, it's really not that important. Like, your short book is your short book, and if your P&L is going left, like, you start to cover your shorts. That's not a squeeze per se. That's just bad fucking investing and bad trading, and your portfolio can do that on the long side too. You know, I mean,
Martin, have you ever heard of synthetic shares?
Well, you know, I'm sort of, you know, again, I've traded every kind of swap imaginable, convertible bond, you know, like synthetic, you know, I've traded every options position possible.
No, sir. I mean where they have created 20 billion additional shares to the outstanding float.
Oh my God.
So, but have you heard that? Through the derivatives chain and the OTC market. I
think this is like when Nicolas Cage, like, sees the new copy of the Declaration of Independence, or like one of those other, maybe Men in Black. No, I haven't heard of that.
Oh, okay. You have a lot to learn, sir.
I will have to become ape-pilled on how that works, because the transfer, when I ran a publicly traded company, we had something called a transfer agent. And the transfer agent had the register of all the shares. Now, the SEC kind of, and I think DTCC, and I think the FINRA self-regulatory body sort of regulates this whole idea that eventually all these shares do have to settle. There are some amount of synthetic shares that kind of just exist in a game of weird, like, hot potato, like, oh yeah, you know, this will settle in 3 days, don't worry about it. And, like, eventually your prime broker is like, hey man, yeah, you got to find these shares, or we got to do a buy-in. And a buy-in is every short seller's biggest nightmare, because they basically just decide to, like, take you out of your position at like 3 o'clock at night, right? And it's, or 3 o'clock at the close, near the time of the close. That's what I meant to say. And there isn't any warning, and it's just going to be a market on close order just to buy out your whole position, and the stock can really go up. That's happened to me once. I was bought in, like, one time in my career, and it was really, really ugly. But yeah, 20 billion synthetic shares. I don't know about that one. That sounds like a really wild conspiracy. I like it.
Martin, you understand how when there's a lot of call buying, the market makers hedge the portfolio with the underlying stock.
My friend, my friend, I have many stories that's about me that you may not know. Yes, I have. I've done some things like this in the past.
I guess with these situations,
my brother in Christ.
Listen, there's so many of them out there that I just keep coming back to.
Tesla was one, right?
Tesla almost. I was short Tesla back in 2018, 2019.
Me too.
And I actually covered. I think I finally closed out my position. I think third quarter of 2019, when right at 275, and going into January, I believe the following January was when I saw the first iteration of what you could call now a gamma squeeze with the call buying. There was a lot of
I'm not even sure that's true. Again, like I'm a skeptic when it comes to market microstructure forcing behavior. Like I've just tried to do gamma squeezes myself. I've tried to run over, like I'm unscrupulous. So like I'm the guy who will call up Morgan Stanley and like get put up on 1 million shares of this stock and then go buy 50,000 calls with Goldman while Morgan Stanley's still trying to hedge and Morgan Stanley panics. Like I like the games like that. They don't really work is the problem. Like none of them, I've never found like a consistent way to fuck over my competitors on Wall Street, whether they're banks, other hedge funds. Like it's just fair, more or less fair. Like there's no real solid way to do it.
Have you dug down the Archegos rabbit hole yet?
Which one?
Archegos.
Oh, I mean, Bill was a Tiger Cub, just like me. So I'm a Grand Cub, but like I know the dude, and like that's different. Okay, that was like that. Almost tipped my hat to. Like that's balls. Like excuse me, to do the TRS that way. Like we thought about doing this with Deutsche Bank, where like it's basically exactly what he did, right? And like we. Deutsche Bank was such a wild bank and still is to some extent, right? Where like we thought about like, all right, how do we like take advantage of this big bank stupidity? And like we slowly realized like, okay, and when I say we, I mean me. I slowly realized that like Deutsche Bank probably would lend me $1 billion with no collateral. I mean, that's the craziest thing in the world. Like it really is nuts, right? And I was talking to all these Deutsche Bank guys, and they're like, yeah, man, whatever you want to do, we're going to do it. And I'm like, yeah, but what about the risk? They're like, what risk? You got us, right? And I'm like, yeah. And they're like, that's all we need to know. Now, how much money do you fucking need? And I'm like, what the fuck? Like, where did this come from?
That's ZERP for you.
Yeah, and then like, you know, because my Deutsche Bank guy was my old Goldman guy, and he's like, we trust you, Shkreli. Do you trust us? I'm like, yeah, dude. This guy would call me from like underneath his desk sometimes, like fucking whispers from his burner phone, like, we're about to upgrade Intel. Buy 50,000 Intel real quick. I'm like, dude, what are you doing? So like, I don't know, like to me, like, all those little games are like really small. Like some hedge funds only exist to like take those little gains and like string them together and they get a little profit. And like Galleon was a little like that, right? Like there was no actual like alpha. In fact, like I worked at a hedge fund. I won't say which. I only worked at a couple. But I worked at an entity that, you know, was kind of like that, where like the actual investments were like a net loser compared to the kind of games and insider trading and like all that stuff. Where like, this is really early in my career, where like that stuff far outpaced like the little Wall Street games, not like hardcore insider info, but more like, oh, this guy's going to upgrade a stock, or, oh, management seems to be like winking and nodding, that kind of stuff, more than like, you know, we have a suitcase of money or something like that. Thankfully, I never worked at a firm that did that. But like I worked at a firm that had like a 30% gain in a year doing that kind of stuff. And they would have had like a 40 or 50% gain if they didn't try to make investments. Like, that was the funniest thing. Like, but that's okay. Like some people are just good traders. And some people say that's how Michael Steinhardt operated. That Steinhardt wasn't really a very talented investor, but he was a hell of a talented trader. And he was a really hell of a talent, kind of like market abuser. He was one of the few people to actually get sanctioned for market abuse on the treasury market. So I had which is a really weird market to try to abuse. I had a funny meeting with an old guy who worked at George Soros's firm back in the quantum days, like way back when. And he was one of the top partners there. I won't say who, but you can take a wild guess. And if you look back, there were 4 hedge funds that were sued for manipulating the treasury market. It was Tiger, Soros, Moore, and Steinhardt. And I believe they all settled except for Steinhardt, who pressed on and won the case, I believe. So, like, you know, participants in marketplaces will do their damnedest to make money over everyone and anyone that stands in their way. Like, that's natural. It's a very Darwinistic place. And I could understand, like, the interest in doing that with AMC or GameStop. Like, okay, cool, I'm in. Like, whoa, what do I need to do? Oh, just buy the shit out of the stock and never ever sell. Like, whoa, what? What if it goes up 10x? I'm definitely selling. Like, no, you're we can't. Wait. So you want me to get into a financial enterprise where I can make 10 times my money and I'm not supposed to get out and, like, call it a big win? Because, like, making 10 times your money is pretty hard to do. And, you know, that'd be sick. Like, no, that's not what we want you for. We want you to buy and hold forever. And it's like, that's not a good thing. Like, I need to get out. Like, if this whole scheme is predicated on staying in forever, how's it going to work? Like, what am I supposed to do? Go borrow against my stock in my future gains? Like, it doesn't really stand to reason. So, Ben, you jump in. Like, this isn't a Q&A. Like, whatever you want to say, just say it. Anybody can speak.
So I hate to be the one to break this to you. The Wall Street bets of old days is unfortunately long dead. You know, I was in that room. I had friends that were mods. They've all, you know, quit for obvious legal and compliance risks. But yeah, Wall Street bets is effectively dead.
What's legal? What's legal and compliance? What is that?
I mean, I know 2 mods that were on Wall Street bets.
I'm just kidding, man. I'm just kidding.
God damn it. I'm too drunk for this fucking.
Why is everyone drunk or high?
I mean, I'm pretty well behaved, but so yeah, both these guys dipped out because they're in some kind of, like, peripheral finance position. And
that's what happened to Roaring Kitty, right?
Yes, yeah, because he was like an RA on the East Coast, and he got fired, as far as I know. I mean, he's obviously right. Yeah, he's set for life regardless. But
he's going to be on Cameo in a few weeks.
Oh, like Hard Rock Nick. Jesus
I love
Christ.
Hard Rock Nick.
It's so good. Jesus Christ. So yeah, but it's just a complete shit.
Wait,
show.
is that Can the Devs Do Something?
I don't think so. Hard Rock Nick is the dude with
Hard
the
Rock
beard.
Nick the one who's like, can the devs do something?
Yes, he's the
he's the man with the immaculate eyebrows.
Can the devs do something? What's going on here? I think that's so. Can the devs do something? The original thing on Wall Street was I would just whine to IR as other investors would, and be like, "Can the company do something? Can IR do something here?" Like, whenever, like, you know, some short report came out, or like a bank downgraded a stock, I'd be like, "What the fuck, man?"
I mean, it fits so many scenarios now. I mean, I use it in a thread that I just wrote on Roe v. Wade the other day. It just fits everything.
The best line is, and I hate the guy with a passion because he hates me with a passion, is David Einhorn, which I have to give him credit where he's due. He's clever occasionally, even though it's not in his hedge fund. He's a good writer. Einhorn said, you know, it's like the movie, there's no crying in baseball. Like, it's true. Like, you know, at the end of the day, like, you have to own your results one way or the other. Like, you know, all the like, oh no, Citadel took my money. Like, okay. Yeah, what do you think this was? Like some fucking playground? Like, yeah, I'm here to take your money too. Like, that's how the stock market works.
Yeah, no, they think that they will bankrupt the entire world to get paid out for AMC.
Which is cool. Like I said, sign me up. Like, I'm in.
Do not buy AMC. Do not buy AMC.
No, I'm not going to buy AMC. But the point I'm saying is, like, that sounds great. Like, I have no qualms about, like, bankrupting the entire world, and filling my pockets with the world's money. The problem is it has to be a well thought out idea that actually makes sense instead of the underpants gnomes plan of step 1, AMC, step 2, I don't know yet, step 3, world domination. Like, okay, what's step 2? Step 2 is it can never sell.
To quote one of my favorite market people ever, if you're going to play Major League Baseball, you have to be able to hit Major League pitching. Like, if you, every single day, whether you're retail or institutional, wherever the fuck you are, every single day that you place a trade on the market, you are trading against like hundreds and hundreds of math PhDs.
Collective wisdom, yeah.
Yeah, God.
You're trading against guys with insider info. You're trading against guys with pseudo insider info. You're trading against guys who are wrong, too.
But that's what makes it so fucking incredible. Like, that's the best part about markets. Like, you are putting yourself against the smartest people on this fucking planet.
Not always, right? What's funny is
there's Ross Gerbers and Kathy Woods everywhere.
That's what makes it interesting. Because if it was only smart people, there'd be no P&L. So like, I used to have a boss earlier in my career who, like, I'd short some biotech stock, and he'd be like, "Man, why is this stock going up? What the fuck? This is crazy." And I'm like, dude, if shorts we put on didn't go up, like, and there wasn't some idiot buying some stock, like, we're thankful for these people, dude. What are you crazy? Like, this thing's going to zero. Like, what are you so worried about? Like, it's up $1. Like, you know, if it was up 50% or 100%, okay. But like, if some moron wants to buy the stock, like, we need that. We need morons. We feed off of their blood. Like, that's the whole point, you know? And like, so like selling AMC call options seems like a win. But again, you have to size it right. If you sell 100% of your portfolio in AMC call options, you're going to get carried out one of these days, right? You might double your money 5 times in a row, but the 6th flip of that coin is going to be heads and you lose. And
I was saying exactly
we have a friend who, when it went to 72, they opened up the options chain all the way up to 145. And we have a friend who sold a ridiculous amount of 145s a year out. Yeah, a year out for literally top ticket. And
nice.
Yeah.
Were you a professional, Amy, or are you a professional?
I am not. No. I worked in mortgage between 2006 and 2008, and then I left corporate. But
you sound like a professional.
Oh well, thanks.
I think implied vol on those 145s was like 600% back then.
Yeah.
That's nothing.
He literally hit it at the top and took them all the way down. He sold them. You should see
biotech implied vols.
Yeah, they have them for July for this year. Then he sold a ton, and he took them from. I think he got them for sold them for. Ben, do you remember? Was it 80 cents or maybe more?
It was $5, wasn't it?
Maybe it was $45, something like that, and he took it all the way down to 5 cents, and they expire next month. It was just like brilliant.
It's so brilliant. Beautiful. It's so beautiful, and that's kind of. I was saying that exact thing last night in our group chat. Like, if you know something's eventually going to zero, might take a year, might take 2, might take 3. You don't need to make an 80% windfall on every trade against a counterparty that's stupid. You can take their money 5, 10, 15% at a time.
And that's the secret, is like, sizing is everything, right? If you make some, like, I think the temptation, and this includes for me, and that's why I try to let my smarter friends do my trading for me, and I just kind of do the thinking, which is, I think, what a lot of PMs are like slowly realize over time. Or, you know, just because you're the PM doesn't mean you're the smartest guy or the richest guy in the place. You can be the smartest and richest guy in the place and like hand over like the tactical, technical stuff to a much better team that does that. I mean, AMC, I'm happy to short 1% of my portfolio in calls. Like, I don't think I'm going to lose 100x. Like, and I'll take the extra percent. 1% additional for this year's returns is good. Like, cool. You know, if I get one of those, like, I invested I invested one night in AMC, and I'm pretty convinced, like, 1% should work out. Okay, 1% more for me. You know, I had 29 left to go, and, you know, I have a great year. 19 left to go, and I have a really good year, and 9 left to go, and I have an average year. Like, that's worth it. You know, that's really worth it. I think the problem comes when you think, like, and I've done this many times, total confessional, like, oh, this is the best idea ever. I have to go 10% of my portfolio. No, wait a second. I have to go 30% of my portfolio. Like, that's where you get into trouble, because market movements in the really short term are kind of random and difficult to estimate. And in the long run, you end up being right. But in the short run, I've gotten run over everybody has, right? But, there's this temptation. I remember when Tilray was like 200, I was like, man, come on, what the fuck? This company's worthless. And, if you start shorting at 20, I mean, what are you going to do,
Martin, you've seen a lot in biopharm. I'm sure, a lot of different cults. Not all of them are gambling.
Oh, yeah.
I mean, they're there because they truly believe in whatever this company is doing. Do you use that as a qualifier to identify, shorts at the end of the day?
Well, it's funny. Like, I remember shorting a stock called Oncothyreon many years ago. They had a drug called Stimuvax, and it was a so-called cancer vaccine. There's never been a cancer vaccine that worked for a reason. Cancer just doesn't work that way, really. I won't go through why, but it's just a bad idea, kind of, because you can't really pre-plan what. I don't know. It's a long story, but
I mean, have you looked at oncolytic viruses?
Yeah, no, I know a lot about oncolytic viruses, but let's stick to this story for a second. So, Oncothyreon was doing a lung cancer trial, and the lung cancer trial was taking longer than expected. And I'm so happy you said this, Ligma, because you see this over and over again. The last 20 years, I've seen it like 5 times. It's the funniest thing in the world. Because a trial is taking longer than expected, the assumption, again, connecting dots where it doesn't make sense to connect dots, is that the patients are living longer in the drug arm, which isn't really a great kind of thesis, because why isn't the null hypothesis that the patients are just living longer in general and there was a misestimate? And lo and behold, in this case, I was right. I wrote a long paper about it before the trial came out. I shorted, I think at that point has been the biggest trade I ever made in my life. And I joked with somebody that they're like, well, how much are you betting on this? And I was like, I'm betting my life. Like, if I'm wrong on this, it's over. Like, I'm just done. I mean, like, my life is done. I'm ending it. But jokes aside, like, and it's obviously not that funny, but, there's this, again, this temptation to like connect dots that don't exist. And there was this like group of people that are like, oh, you're wrong, you're crazy, et cetera, et cetera. And it was a cult. It was a small cult, but it was still a cult. And, the thesis of the cult is always like, well, if you're wrong and we're right, it goes up 30x. I'm like, I get that, but like, that's like saying if I step out of this window, sprout wings and fly off to Mars and live there as a Martian, like, yeah, it's going to be one of the most incredible things ever, but it's also very unlikely. I'm not going to sprout wings. Instead, I will plummet at 9.8 meters a second squared, and that's it. It's you have to think probabilistically, and the most likely explanation for, in fact, like almost certain explanation for what was happening, we determined was not some fluke that this cancer vaccine all of a sudden worked. It was just that whoever made this clinical trial just fucked up and didn't realize that cancer patients were living longer because cancer therapy got better over the years, and that's really it. And that made a lot of sense to me. And so when you connected the dots, as a conspiratorial kind of investor, you screwed it up. But as you thought soberly, you could figure it out. And here, it's easy to think soberly. I think the bigger question that every trader has in their mind is, okay, well, when do I short this? When is it going to go down, right? Because we want to optimize our return. And that's something I never really cared about. Like, short, small enough position that it adds to your P&L, but not so big that like you need it to work tomorrow. Like, I think that's my approach to it. What do you think, Ben?
Yeah, I had to step away for a second to move some cars around. You were talking about cancer survivability. Were you talking about CVM?
No, I've been short that one too. This was Oncothyreon about 10, 12 years ago. ONTY was their stock ticker.
Yeah.
You remember that one?
I will say your cold stuff is 100% the AMC apes, and I think it's going to turn out exactly the way that you just said it. So I mean, it's just echo chambers, groupthink, like cope, like they all sit in spaces for 23 hours a day, making them all feel better about holding and watching hundreds of thousands of dollars slip through their hands, and just hold. And what if you sell the next day, it could run up to 500. You could wake up, it could be 500. That's right. Exactly what it is.
Amy, you should tell him about Lou as well.
About who?
Lou versus Wall Street.
Oh God, I can't. I mean, I don't even think he doesn't have enough time. Like,
what are the
Martin,
cliff notes?
we've all been observing the circus for well over a year. It's really quite something. I think I'm going to write a book at some point. I need to find a.
No, you should. I'll write it with you if you want, but or I'll publish it. But the funny part is, like, I would have guys in jail be like, come up to me like, "Yo, dog." And I'm like, "Yeah, what's up?" And I like start to like puff up myself a little bit, like in case this was about to be one of these jail attacks I heard so much about. Like, "Yeah, what's up, dog?" They're like, "Yo, can I talk to you?" I'm like, "Yeah." What? Like, you know the stock market, right? You're that stock market dude. It's like, yeah. I'm like starting to cool off, like sit back down. I'm like, "Yeah, what's up?" Like, "Do you know about AMC?" And I was like, "Yeah, I do." Like, should I buy that? And like, sometimes they'd be like, a guy with $500 or something, but occasionally it'd be like some cartel member that had like probably like $50 million stuck away in like, $100 bills in like Colombia or something. And I'd have to explain to them why, AMC wasn't going to be the revolution that, people wanted it to be, because like you could see, like, the old saying, like, when your dentist tells you to buy a stock, like that's when it's a good sell, right? This is like dentist phenomenon too at the 100th degree. Like,
oh, it's a very, very intriguing trip into social psychology is what it is.
It really is. Has any of you ever heard of a company named Energous?
No, what is it?
So this was back in 2016, 2017, and I was leaving venture capital at the time, partly because of my disgust for the way the industry worked, and how
this is when you wound down Ligma Ventures to start Ligma Capital.
Yeah, pretty much. We'll go with that. And prior to venture, I mean, I was in.
I'm joking.
I was in public equity before, but I saw an opportunity. Probably was a little bit early. Actually, it was down in South Florida, which now is a totally different scene, but still same energy, same puffiness and whatnot. But my point is when I left, I heard about this company named Energous, and they were claiming they can do wireless charging.
Sweet.
Which was interesting to begin with, and you go down the rabbit hole and you see there's nothing there. And actually, at the time, they had they signed a good board member. I think it was the original Motorola guy. 90 years old now. Sorry, there's some feedback from someone.
Sorry, it's me.
Yeah, so they got on these prominent board members. The guy who created the cell phone. They had a Jeep Pie from the FCC make a comment about the company. But when you look at the science, there's really nothing there. But that was my, I guess, realization of how strong these cults are. And when you just try and dabble in and see what the bull case is and why they feel so strongly about this, you realize it almost goes back to the Herbalife thing. It's their promise to dream. There's a strong group of retail investors that are promised a dream that they all want to believe. They tend to be from the same small town, and and as soon as you try and cast a little bit of doubt, and not by just by accident, just by inquiring, you realize they completely block you and shut you out. So I always found that interesting, and part of my process is to find more of those, because there's a ton of them out there. These have been the biggest I've seen, though. Tesla, GME, AMC, so forth.
You just have to pray that some certain person on Twitter doesn't tweet out that stock hours after you short sell those calls. It's bad experience, telling you from experience.
I actually don't short calls naked for that reason. I've considered spreads at some point, but selling calls outright is as I've heard people say, it's like picking up pennies in front of a steamroller. So yes, you have to factor that into your models. Is something now memeable is a real question when building out your probability models.
Right. So I think that was the first time I ever encountered a meme stock of the sort, especially when someone tweets it out on Twitter. And that was just like such a black swan that I was like, this can't be real. I don't know how I was supposed to do that, but yeah, very interesting to see how AMC is still holding up and GameStop, even years, like a year and a half after the event.
It is surprising in some ways. I mean, you look at something like GME that's still, I think, over 100. It's crazy to it's crazy to see it, like you said, a year and a half later.